Hey there, traders. This is Chris Keene from A Keen Point of View, and this is the weekend wrap. You get this for free if you want to get the a daily updated every morning before the New York markets kick open and an end of the day currency watch report. Sign up today. All right, let's get into the details. So it was a busy week with data as Australia kicked it off with a Reserve Bank decision, GDP, and an employment report. It was kind of a mixed bag with them. And then we had the ECB and BOE on Thursday, both keeping interest rates on hold, but the ECB suggesting that they will take further action in lowering interest rates in the future. And then today we had non-farm payroll, which was actually much better than expected, but it had little effect on the currencies. And the University of Michigan report showed that confidence may be swaying a bit, but that could be due to the physical cliff issues that we had. Some commentary back and forth today, and apparently they don't believe they're moving in the right direction at the current moment. But there is still 3 weeks for a resolution to that situation. Let's start off by looking at the Euro USD. The Euro USD, as you can see, it moved up this week to test the ascending trend line that has basically capped the price action not once, twice, but hey, now 3 times, right around 131. And the pair then began to retrace, and all this did happen after Draghi's press conference, where he did state that they were looking to lower interest, looking to add liquidity to the markets in the future, maybe, and you can see this broke the pair below significant resistance between 130.20 and 130. And once the pair broke below these levels, it was off to the races. It looked as though we were going to get a little support here at 129.50. Actually, that's personally where I closed my trade on that pair. But that was not the end of it. Today, well, I guess last night in early European trading, it was suggested that the German economy is slowing, and this caused the euro to lose a little bit more ground. But the pair did fall down to a very significant technical level and reversed. It fell down to the 50 fib from the move higher it had since November 13th, right around 128.92, and it also coincided with the daily price resistance that has capped the price action last time it moved down here right around 128.80. Now the question is that if this pair is going to bounce off this 50 fib and continue to move higher and retest that trend line, or are we going to get stuck right here at the at the 0.382 fib again at 129.50? Now that I can't tell you. I'm not a psychic. I don't have a crystal ball. But what we can do is watch the price action here. If the pair bounces back down and breaks below this 50 fib, we could very well be off to the races here for a continued move higher. Initially going, we'd have to break out of the fib range at 128.37, and the next resistance would be at 128, and then we could go all the way down towards the 127.50, 127 level over the next few trading days, or I guess probably next week. But that would be due to that would most likely coincide with more chatter out of Europe, the lowering interest rates, and some physical cliff issues. But what I'd like to see, I would like to see the pair retrace a little bit here and move back up to the 130 level, give us an opportunity to get back, and give me an opportunity to get back in the trade and go short from that point. So I'll keep my eyes open for that. So I'm looking for a retrace up to the 130, or if we do break back below this 128, as an opportunity to enter for the continued move lower in the pair. Next pair we're going to look at is the Great Britain USD. As you can see, the Great Britain pound cross broke out of its channel that it had been riding higher over the last few weeks. But we didn't have the kind of follow through you would look for on a channel break. As you can see, it broke below the channel, and it moved down to test the 160 area, which we had 160 area, which was a little bit lower than the 0.382 fib from the entire move higher at 160.11, but then the pair has had a pretty nice bounce today. So what we're going to be watching for to start the week up is this 160.50 level, just like the euro. If we move up to this 160.50 and this 160.60 level, it's a strong resistance zone. If we break back above that, we're definitely right back in the channel, and we could be pushing back up to the 160, 130 in the long term. But if we move up to this level and we get a bounce and we break back down below, then my first target on any move at that level would be the 159.60, 159.76 resistance level through the fibs right here. And we could get a continued move lower all the way down towards the 159 level. Now if we So what we would take is bounce up, and we'd be looking for a push back down. Or if we just happen to break right through these levels, actually, I would wait until we get to the 50 fib to see the price action there before I would enter a short there, because it's not that far below unless you're going to take the trade here and now. The next pair we're going to look at is the Aussie USD. You can see the Aussie has been a confusing pair to trade if you like any sort of volatility whatsoever to give you a little bit of conviction. The pair has spent the majority of the week just boom, 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 going between 104.35 and 104.85. And you can see today was another false breakout. It looked like the pair was going to move up and break out of that area, but it did not. And you can see on earlier in the week, the cross did break below the ascending trend line. I actually went short there, looking for a move lower. I was hoping to at least get towards the 103 level, but the pair rebounded. I ended up getting closed out around break even, I believe. It rebounded back up. And continued to move higher, but you can see now it's the ascending trend line that used to be support has been acting as resistance. You can see it bumped into that level twice now and has come right back down to earth. So what we have to watch for the beginning of the next week is a break of either one of these levels, a break of the 104.85 level, 104. I mean, we have to get out of this range before I'd enter any trades. And I would favor a move to the downside just because it'd be an easier trade. If we break to the downside, we could get a little bit of momentum, go down to the 103.35, 103.50, then the 103 level. But to the top side, there's a lot of resistance staggered right in there. And if we look on a daily chart, it becomes kind of obvious. You can see on the top side we have this descending trend line right here that has capped the price action as of lately, and any move up towards, for the last year, any move up to that level is going to be a hard nut to crack. So it would have to break. And it also has strong daily price resistance just above that at the 105.50 level. So I'll be watching that to see if any break up to that level. I'll be watching that to see if we get a break. If we do break above that, we have 106.30. We have strong resistance again right there, stacked right on top. So the easier path, the path of least resistance, would be a move lower. But I mean, the pair is not going to move one direction just because there's less resistance levels there. If the risk on and we do see a move higher in the commodity crosses, so we're going to keep our eyes at that, looking for a break of the range. And the better risk reward is for if we get a break to the downside, it would be an easier trade with more profitability capabilities. The CAD, on the other hand, blew out earnings today. Blew out employment numbers today. I think expectations were 11,000 and it came in around 54,000. The pair did finally had enough momentum to break out of its consolidations range between 99.50 and 99, but it did just move down to the next support level we had right there at 98.70. So now the question is, if the pair can close down below this 99 level, we could see this, just see the pair drift back in, and just we'll have a larger consolidation range between 98.70 now and 99.50, because I mean basically that's only a 80 pip range there. And we would need to see a real break of this 98.70 level to really get things going, and we could get a push down towards the 97.64 level in the short term. So basically heading into the new weeks, I'm going to be looking for a break of 98.70 or 99.50, or you could just play that range and try to scalp in and out for 30-40 pips. The yen, on the other hand, has been a little bit exciting this week. If you were smart enough to play this, what I think is a wedge, other people are saying is a triangle and so forth, playing this range, bouncing it back and forth, but I would doubt many people saw that coming before it actually occurred. So what we have here is the cross has strong support here at 81.70, and then we have this descending trend line that has been picking up the price action here throughout, and currently is around 82.62. So what we're watching here is basically just play the range until the range breaks. You can see today it moved all the way up to test go all the way up to 82.85 before retreating right back into the middle of the range at 82.36. I mean that's basically a 50 pip move back and forth right there. So my plan heading into the new week is to play the range until the range won't let me play it any longer. Let's take a look. I think we have an interesting setup in the Great Britain JPY. The Great Britain JPY is sitting right up at the top of this resistance, right up the top of its on a daily chart of strong resistance, starting at 132.50, followed by 133.50. The pair will have to break above this level to really have clear sailing to a continued move higher, and you can see it is fighting a ascending trend line. ascending trend line right here, right now. A close below this trend line, say in the around the 1032 area, could open up the cross for a move lower, and the first level of resistance would be 130, 150, and so forth for a push down. All right, everybody, that's it for Keen Point of View Weekend Wrap. Everybody have a great weekend, and don't forget to check back during the week if you want to sign up to receive the Twitter feed and the morning and afternoon videos. Go ahead and do it now. First week's free. Why not give it a shot? And you can also access then Yen Talk, where we'll go through all the yen pairs. All right, everybody. Have a great weekend.